Good afternoon, ladies and gentlemen, and welcome to this week's live trade review session. Sorry, I've lost the screens now, so I'll just bring the markets back up there. Obviously, it's been another difficult week on the markets. Late last night or early this morning, or the Russians were shelling a nuclear plant and or Europe's biggest nuclear plant in the Ukraine, and as fires broke out, there was a lot of concern, obviously, and without any clear pictures of what was going on, there was a lot of worry and fear that went through the markets, and we saw all of the equity markets trade off aggressively, including the Asian markets. So in the next hour or just over an hour now, we'll see the market reaction to that from the US as traders there get to their desks. It's been very mixed here in Europe today. At times the futures have traded higher. Very early this morning there was some resilience coming through into the indices, but that's dissipated now, and we're seeing the markets back under some pressure, off of their lows, admittedly, but still under some pressure. So the reason why we or you chose today for the live session is that we have non-farm payroll coming up in about 7 minutes or so. We just want to have a look at that and see how things are going there. I think in the context of everything else that's going on, the conflict in the Ukraine over the last period of time, that the likelihood is that non-farm payroll doesn't really matter today. Whether people are expecting the number to miss or there to be a particularly good number, I think the consensus estimate at the moment is about 407,000 jobs added, the unemployment rate dropping to about 3.9%. But everything has to be looked at in the context of what's going on in the Ukraine, and I think the expected impact of non-farm payroll is going to be far less today than it has been for some time. I think what you might see is a reaction to non-farm payroll in the next 5 minutes or so, and then there is definitely going to be a completely different reaction in an hour's time when we start to see the type of orders that are coming through into the American equity markets. I've spoken in the past when the markets were rallying before about the fear of missing out and people rushing to get into the market, and the markets continuing to rally to those new highs. I was watching an interview there just a few minutes ago, and we now have the FOBI, which is the fear of being in, which we've seen a lot of adjustment this week. There has been some bargain hunting, and we've seen that over the last 10 days or so. Equity prices are a lot lower than they have been for some time, and certain stocks are being picked up. The bank stocks are being hammered again today, or the majority of bank stocks are being hammered today, particularly the European bank stocks, who would be deemed or envisaged to have far more exposure to Russia. So as sanctions continue to tighten and are focused or aimed very much at the world of finance or Russian finance, and cutting back on what the oligarchs can do and what Russian banks can do, the European banks are coming under pressure because it's not completely clear at this time what exposure they have to the Russian counterparts. The impact on the American banks is considerably less, but there is some impact, and banks pretty much have been sold off in all locations. So we're moving a little bit closer now to the opening bells. The thing of note, just to go around a couple of these markets quickly while we're talking, the euro is trading at a low If we open this up to a daily chart, you'll see that this is the low for quite some time. Even on a weekly chart, we're going all the way back to June or May of 2020, before we last traded at these levels. And a test of 109 definitely looks on the cards at this time. Gold, tried to sell gold a little bit earlier at 1951, slightly above the level that it traded overnight. You can see here, this is only a 5-minute chart, so this was the overnight move. So I tried to sell at 1951, just above those levels, but didn't quite get there. Obviously we've fallen away quite a bit now to 1943, and I've cancelled that order. I did sell gold first thing this morning. Again, some of the resilience that we've seen in the equity markets convincing me that the stories of what had gone on overnight in the Ukraine not being quite as bad, and now some of the images that we're seeing of this nuclear plant in the Ukraine show that none of the crucial parts of the structure were hit, and that would lead me to think that perhaps things are a little bit better than people have been expecting. So we're seeing the Dow futures pop up a little bit, just there, back to about the entry point that I put the trade on earlier, around 33,495. We're just above that now. So the numbers are due out fairly quickly. CNBC, or fairly soon. CNBC are doing their usual run around of people seeing what the estimates are going to be. Like I said, I think the impact of this number is going to be a lot different than we see in usual months. So we're about 10 pips or so off of the level that I traded. Slight weakening there as we go into the number, so I'll just keep an eye out for the number there as we're going through. So we've got a minute chart open there at the moment. You can see that the last half an hour or so, the trading range has been hasn't been that expansive. We're just moving within a band there from about 33,450 up to 33,510, something like that. So the number's not quite out yet. We're still waiting for that to come through. I'm just going to keep my phone open so that I can close this trade if necessary. I don't have a limit order in to close it out. I'd like to see what the reaction is. As I said, I think I only have the one trade left open. Today's not been sorry, it's just some trades coming through there. So we've had a fairly decent jump there. So I'm just going to close the position that I've got on there. So taking about 120 pips out of that trade, something like that. So a nice jump to the upside. Kicking myself even more because of the stops that perhaps I got bullied into a little bit earlier. But a nice trade there for that particular bell. If I just look at the so I bought there earlier at 33,495. Didn't quite. I think I was clicking 620 in terms of the order that I was trying to get out. I got filled at 33,587, but significantly better than we're seeing at the moment. The unemployment rate has come in a little bit better than expected, 3.8% versus the estimate of 3.9%, and the jobs report was significantly greater than people were expected, significantly greater than last month's numbers as well. So we're seeing that boost here on the back of that. The number came in at 678,000 versus an estimate of 407. So it's we're trading back up to those levels that I got out of a few minutes ago. I think the thing that I was talking to you about before we saw the number coming out as well is the worry here would be that there's going to be this initial boost around the number. It's a good number, And then really the expectation of the markets when they open in about 59 minutes time is going to be the real key consideration for me. I do think that we are seeing some buying as we move down to these levels. The average hourly earnings were reasonably good as well. We're not quite getting back up to the top of that boost that we saw that I tried to sell into and unfortunately missed, but it was a good trade all the same. So there's a question in from David. How do I see dollar funding in the market? Would additional pressure affect your risk limits? My risk limits, David, are pretty much the same regardless of what's going on. I'm always looking at a drawdown limit in terms of how much money I want to expose to the market at any time. Maximum usually around 15%. Don't really want to get too close to that number. But in terms of the dollar, the dollar is very strong at the moment. If we go back to the markets there, 132.60 against sterling, and 109 against, or 109 and change really against the euro. So I do think the dollar is going to continue to strengthen during this period as we see this situation in the Ukraine continue. The big question is how long this is going to go on for. Inflation continues to be a very serious issue, in my opinion. Probably the thing that's going to overhang the market for longer, and unfortunately the longer that we see issues coming through from the Ukraine and likewise from Russia, that's going to continue to impact on that inflation. The Russians are under serious pressure. Sanctions are going to continue, right? And they're going to get harder, and we're going to see more fallout in that direction, I believe. I don't think anybody expects a full-blown war to start unless there's any sort of invasion that might occur into a NATO territory. I really don't see that happening, and for that reason I think we're just going to see more and more sanctions, and that's going to and the pinch is really coming to bear on the Russians, and I really think they underestimated quite how big the sanctions would be, how many of them there would be, and how far-reaching they would be. And I think there's a serious miscalculation in that regard. Now, obviously, the Russians will hold many foreign currencies. They will hold a lot of cryptocurrencies as well, and that may be one of the reasons why we're seeing crypto having such a bad run at this particular time. I was listening to a report on CNBC a few minutes ago where Bitcoin isn't even in the top 50 markets that are watched on CNBC, and that's the first time ever. I think Jerome Powell yesterday spoke about if there are going to continue to be transactions involving Russia and other states that are allied with Russia, it's likely to be in cryptocurrency. So I think that's why they're coming under pressure as well. But no, I think the sanctions will continue to increase. I think that flight to the US dollar will also continue to increase over the next period. But for me, the key part for this afternoon is the reaction after the opening bell in New York. Obviously, we've had a positive spin here with non-farm payroll. Whether or not that can be continued through into the opening bell in New York is yet to be seen. I personally have a preference to be slightly long this market at this particular time, so I'll be looking for another entry point in the Dow. I don't think I'll trade any other markets this afternoon. Gold is I'm looking for it to break down every single day, unfortunately I think I've been caught out probably 3 out of 4 days this week with the breakdown not occurring to the afternoon and being too early into the trade. When we look at the trades for this week, just because I'm running out of time when I look at the time, so I've just got the one Dow trade from this morning that stopped out to update. That was a loss of about 250 pips. So it'll take the return to down, and then we've got the trade that we had on, which was a win of about 97. So it's about 150 pips worth of alteration to that, which is going to take us down to about 633 pips or points for the week. The negative days today have been stopped out 5 times on my trades, which really for me should be a circuit breaker. I think I'll take one more trade this afternoon around the opening bell and then be done for the week, and we'll see how that goes. Part of the reason for that is the win on that trade around the non-farm payroll, so that gives me a little bit of confidence to put one more trade on this afternoon. The big thing that I've been trying to do all week is manage the risk more effectively, give you more information in that regard, which I think I've done. The one thing that I would have liked to have done and haven't been able to achieve this week is to reduce the number of trades down to about 10. I think I'm averaging about 14, 15 this week on a daily basis, so I'd like to take that down a little bit and just work around that optimal optimum trade number in terms of the number of trades that I take. So I'll continue to work on that over the coming week, but it is going to be a positive week. It's going to be somewhere around the 630 to 650 pips worth of profit this week. Should probably have been closer to 1,000. It was around 1,000 this morning, but I've got the early trades wrong around the indices and also gold. And as I mentioned already, I think a large part of that was being emboldened by the resilience that we saw first thing this morning, which hasn't carried through. So we'll just take one last look at the markets before I leave you. Sorry, better save that. Take one last look at the markets just before I leave you here. So the Dow's back down to about 33,505. So close to an entry point I'd be interested in. I probably won't take the trade right now. I'm gonna look for something a little bit lower as we run closer to the opening bell in New York. But again, as I mentioned earlier, probably on the long side of this market, looking for there to continue to be a bit of bargain hunting. As I mentioned already, the banks are getting hit, so we'll see how that goes, and I'll update you further during the course of this afternoon. So probably only one more trade today. Thank you very much for joining me.